No mai, haere mai, ko Joy King, toko ingoa, ko Aote Rangatira te Ropu, Waihanga Kimu o Aotearoa. Hello and welcome. My name is Joy King and I'm the Executive Director of the New Zealand Game Developers Association. I thank you all for joining us. Obviously, we're going to be talking about the GDSR and talking with Lance Burgess, the PikPok CFO and NZGDA board member. And we're going to be talking about accounting for the GDSR. So before we get going, there's just a little bit of housekeeping to go over. As always, this webinar will be recorded and made available in the coming weeks. If you do not want to appear on camera, please ensure your camera is off. There'll be time for Q&A throughout the webinar. Lance is happy to stop and ask your questions as they come through, so please feel free to pop your questions in the chat box. So without any further ado, I will hand you over to Lance.
Greetings and welcome to the webinar on the accounting aspects of the GDSR. As Joyce said, I'm happy to take questions as we go, so they can either be in chat or you can raise your hand. All right, so I'll move on. As with most things, we have a disclaimer. I've had a lot to do with the GDSR in both the discussions with the government before the policy was made, drafting the policy, and also getting the policy finalised. I believe I can answer all questions, but I will say that it is best to get a second opinion before relying on anything. Okay, the big thing. The deadline for the applications is the 30th of April. This is not a lot of time for us to get the information in to get the claims moving. April is a short month due to Anzac Day and Easter as well. It's going to be a bit of work, and I have been talking to New Zealand On Air about how to make this possible. And I will go ahead to the next screen. So just to give a little bit of background, GDSR will rebate eligible expenditure on developing digital games as long as it's content that is approved, which we'll come to later. Now, this is not just the initial development of games. It will include post-launch content creation, live operations, updates, downloadable content, etc. Basically, what that means is for people that are developing games, their salaries and contractor costs should be deductible in perpetuity while we have a GDSR. So what does New Zealand On Air want to progress the claims? Well, first thing is they want financial statements for the year ended 31 March 2024. Now, I realise that many of you out there will not get your external accountants to do this work until much later than 30th of April, and I'm sure if you ask them to do that work that soon, they will not be interested in doing it because they do other things in April. So to allow for this, New Zealand On Air will accept management accounts due to the timeline. This does mean, however, you will need to keep track of your information and have it fully reconciled up to the end of March so you can provide useful information to New Zealand On Air. To enable a claim for costs of labour, a full amount of information is required by persons performing eligible game development tasks. Now, this does include salary and contracting, as I said before. These costs include all costs that are related to the remuneration. So that might include certain bonuses and allowances, as long as they do form part of the package of the person. So, for example, it might include certain allowances for whatever reason. It might be, sorry, I can't think of any right now, but there, sorry, will include things like additional benefits, such as health insurance, etc., whatever the costs are of the actual remuneration. New Zealand On Air also needs to know whether the persons are domiciled in New Zealand. That means that they are effectively working here, because this rebate is only for relevant expenditure of people working in New Zealand. New Zealand On Air also wants them to know about your company structure. Do you have multiple entities, parents, subsidiaries, etc.? This is relevant from the point of view of making sure that there is not double claiming. I know there are some game development studios that do have parents and subsidiaries, but also sister companies as well, where the IP is held in one company and the development's done in the other. Just be careful to register the correct entity, the one that is actually incurring the costs. Non-eligible game development must be separated from the eligible expenditure and the allocation basis explained. So non-eligible games include gambling services, pornographic content, and others. Now I will just go over those. Gamified software primarily for another purpose is excluded, e.g. gamified quizzes and accounting software. Linear content with no or limited interactivity, such as a 360-degree movie played on a VR handset, that's excluded. Games that are developed for industrial, corporate training, or institutional purposes, or games that are intended for commercial advertising purposes or to primarily commercialize a product, entity, or service. So these games we looked at on their merits. If they are an insignificant part of the game itself, then I think this is additional information that you want to give to New Zealand On Air to establish that there is a claim. But if the games are primarily for that other purpose, then they will be disallowed. There's also loot boxes we need to be careful about. We've had quite a discussion around loot boxes, and it's a hot topic around the world with governments right now. But the current position on loot boxes is that the presence of loot boxes in a game does not render that game ineligible for the GDSR, unless the loot box involves game mechanics that allow real money winnings. So do expect some questions in the application form around the use of loot boxes. And there will be a question about any further information which you want to provide to enable New Zealand On Air to determine eligibility of your games or costs. All right, I don't think there are any questions so far. I see there is something in chat there.
I was just going to read that out for you, Lance. So Shelley's wanting to know if, here it is, the rebate just covers expenditure on people employed on gaming work. Is that correct? So if you spend on lawyers, is that covered?
The easy answer to that is no. However, there are some exclusions, such as costs to get trademarks, for example, to trademark the name of your game or your studio potentially. We'll come to some of the additional items beside labour that are allowable expenditure in a few slides.
Excellent.
Okay. Okay, so the GDSR, unlike most of these rebate schemes around the world, does not just rebate labour costs for direct game development. Our GDSR allows for wider ecosystem labour costs, such as design, quality improvement, research, live operations, marketing, and community development. And this was a concession made by the government where it recognised that basically building the ecosystem around the games is just as important as actually building the games, and they wanted to encourage growth of the industry as a whole and all the parts around it. So they allowed for a broad definition of labour costs that could be claimed, but on top of that, they will allow external labour expenditure to be included, such as external costs for R&D, prototyping and testing, realising that those aspects of the game are important to our ecosystem again. But on top of that, there are some non-labour costs that are included. If you just give me a second, please. Right. So, when we were making submissions to government, we gave a list of other things that we would like included, and most of them were included. And the good news is it does include expenditure on game engines such as Unity and Unreal. However, we need to make a distinction, especially with the likes of Unreal, that the government cannot, for policy reasons, rebate back-end royalties calculated on sales. And we're aware that Unreal, you can pay the costs of the engine up front. That would be an allowable cost for the GDSR, but most people using, or studios using Unreal, will tend to pay the back-end royalty calculation. Unfortunately, that is not claimable, and unfortunately, the government cannot move on that for various reasons. Other costs, such as production software as a service costs, like Adobe Cloud, Maya, and game production hardware and software depreciation costs are allowed as well. So our game developers, their PCs and peripheral and hardware and software that they use, the depreciation costs, if we purchase these things outright, are also allowable costs. We need to make sure that we're using IRD allowed depreciation costs to write these items off, though. Online hosting and distribution, such as AWS costs, are also deductible. The cost of obtaining trademarks, and that's typically registration fees in various countries, plus the legal fees with that, they will be allowable. Licensing of New Zealand material, such as soundtrack, is allowable. And game development conference attendance, fees, and related and reasonable travel costs are also included. The reasonable costs refers to as long as you don't go overboard and have 5-star accommodation and first-class air travel, the cost should be allowable to claim. And this is in recognition of the fact that these conferences are where a lot of business is done. Publishing agreements get signed, monetization of our titles, etc. There's just a lot of discussions happen at these conferences. So it's accepted that it is important for us to go to these, and therefore the GDSR will rebate the costs of the reasonable attendance as well. Auditing costs relating to the GDSR application will also be claimable. There's a bit of a change here. New Zealand On Air originally envisaged a situation whereby an audit would be required for all claimants. However, due to the time constraints and the requirement for getting money out of government by 30th of June, New Zealand On Air is now allowing the internal management reports, as discussed earlier. They will ask questions and require audits on a random or as they see a risk basis. And the The cost of those may be directly carried by New Zealand On Air, but however, it may be required to be carried by the applicant, and in that situation, the costs are deductible. Looks like we might have another question. No, we don't. Okay, moving on. Exclusions. There are some things that are not allowable as costs. General business overheads, such as administration, rent, HR, legal, and audit costs, unless included above. That's relating to the annual financial audit costs for companies that do need to have one. That is not deductible, but a specific audit just looking at the GDSR claim is. Labour not directly related to game development is not allowable either, but hybrid positions that include some game development can be prorated. Right, so there's been some discussion recently around what is expected if you don't claim a full salary. Say, for example, you have a studio head who spends part of their time developing games. I'll use an example. Say, for example, the CEO spends 10 hours a week on average in product reviews and contributes to game development in that fashion. And then 10 hours a week is approximately 25% of the salary. Therefore, they would allow 25% of the CEO's salary to be claimed. That's the general idea of claim. New Zealand On Air does reserve the right to come and ask further questions just to satisfy itself as to whether the claim is reasonable. But the good news is we do not need to keep timesheets for everybody to justify the level of the claim. It is accepted that there'll always be a little bit of an overhead component with all of our staff and contractors where there are other business aspects, meetings that may need to be dealt with. These are typically be only a few % of the person's time. We are not expected to make adjustments for those. We cannot claim expenditure in other businesses that are already claimed. That is just to make sure there is no double dipping, and that is why there will be questions around how our studios might interact with other related entities. And the government will not allow a claim for expenditure funded from another source. Now, that is very broad wording, but basically what that means is if you're getting funding from elsewhere, from the government for the same expenditure, that we cannot double claim. So studios will need to decide which provisions they claim under going forward. A good example of this would be the research and development tax incentive. A number of studios do claim that. There will be an overlap in the salary expenditure that is being claimed for both, and we cannot claim at both. So we need to work out how to deal with this. There will be future clarification around this from New Zealand On Air, but it's accepted that the GDSR claim will go in first and the RDTI will likely happen many months down the track. We need to potentially make an adjustment for the claim in one or other of those, depending on where you get the best outcome. All right, moving on. Right, the tax consequences of all of this. Excuse me, GST is added to the invoice to New Zealand On Air for the GDSR if you are GST registered. The amount paid then includes GST, and GST is to be paid to the IRD in the relevant GST return, which will, for most of us, be the GST return when the money was received. Studios that are not GST registered, I'd like to point out there that it may be because you haven't yet received revenue, but even though you aren't receiving revenue, you can claim your costs. Now, if you are expecting to have most of your revenue from overseas, there will be no GST on that overseas revenue. However, you will still be able to claim the GST on the costs you've incurred in New Zealand. So it would usually be recommended to register for GST. Now, the complicated stuff, this is a little bit hard to follow. It's almost reverse logic, but the GDSR part, excuse me, the GDSR payment is excluded income under Section CX 47 of the Income Tax Act. This means it is not taxable income. However, the expenditure claim for the GDSR is excluded expenditure under Section DF1 of the Act to the value of the GDSR income. This means it is not tax deductible expenditure either. Bearing in mind that you would have likely incurred the expenditure irrespective of being able to claim the GDSR, what this will mean is the net effect of this is that the GDSR income is effectively taxable because both are out of the tax net. Whereas if you didn't have the GDSR, you would have had the expenditure, which would have been tax deductible. Now, the best way to get your head around this, if you can't follow that, is basically just accept that the GDSR payment is taxable and claim all the expenses as normal. The outcome is the same. This was a mechanism the government put in place to stop the film and screen rebate from getting unintended benefits by using foreign tax entities, etc. I won't go into those details, but we are in that same part of the Income Tax Act, so unfortunately we have to live with those consequences. So the GDSR is taxable indirectly. All right, that is everything I wanted to cover that I thought was important. I am happy to take questions now, either by chat or by direct question.
Thanks, Lance. That was really informative. As Lance says, if you've got questions, please feel free to type them into the chat box and we'll get those answered. Lance, I wonder if you can just clarify a little bit more about the taxability of the GDSR. I found it hard to follow. Are you basically letting people know that when it comes time for their accountants to do their end of year financial statements, that the accountants need to know that that is taxable income? Or is there some kind of mechanism that the accountants should be aware of?
I think the best thing to say is that it is taxable income. It has been confirmed that this is where the GDSR sits in terms of the Income Tax Act. Getting your head around what I just explained, I can understand it is difficult. It's a little bit obscure how it works, but basically when we were getting the GDSR set up with the government, we made it clear that because we knew that the rebate was 20%, that we didn't want it to be taxable. That is what they've given us, but we're also caught with expenditure that is not tax deductible as well. And that's why I was saying, because of the treatment of both the income and expenditure is the same, whether both in or both out, the effect is it's actually taxable. And that's a discussion we're having with government now, but it's a difficult discussion to have in the current environment. We are very lucky to have the GDSR in the very constrained cash situation that the government finds itself in. So it's a discussion that we will have, but we need to have it very carefully. And I would have to suspect that it is unlikely to be resolved in the near future.
Thanks. There is another question there. Could you please further explain the back-end Unreal Engine fees and why it's not allowable as opposed to upfront engine costs?
Right. This is detail I didn't intend to get into, but I'm happy to answer it at a broad level. I'll start by saying that the GDSR is the only scheme like this provided by a government around the world that I believe allows a deduction for these types of costs to start with. And when we were having the discussion about broadening the GDSR, because the government was only going to provide a 20% rate, we broadened the ability to claim things, and this is how these costs came in. We did discuss Unreal at the time because I know that you have the two models and that most people would tend to take the back-end royalty option to minimize their risk. But there is a convention with the WTO, I believe, that prohibits there to be a rebate on royalties. And secondly, there's also government policy around providing funding effectively to overseas entities. And this was the compromise we came up with. Yes, they are allowed if they're upfront fees, but if they are back-end engine fees, unfortunately, they are not allowed, and the government will not change its position on this. While it's not the answer you wanted, I hope it does answer the question all the same.
Right, thanks, Lance. Any other questions, please feel free to pop them in the chat. Just got a thanks for that answer, Lance, so thank you. Yeah, interesting times, and there's obviously going to be a lot of questions come up in the next sort of month before these applications need to go in. We are hosting another webinar next week. The title of that is A Practical Guide to GDSR Applications, and that's going to be answered by Amy from NZ On Air. So feel free to register for that. Details are on the events page on the NZGDA website. Thanks, Oliver. Nice to see you join. Just replying to your note in the chat. So unless there are any other questions, we'll leave it there. This video will be popped up on the NZGDA website just in the next week or so. So you'll be able to check back on some of the details that Lance has provided.
If I can add to that, Joy, if there are any questions during the month of April while you're collating your claims, New Zealand On Air certainly will be available to answer those as is required. I'm happy to take emails as well around the questions as well if you're not able to get a question answered by New Zealand On Air or by anyone else you're dealing with. I'm quite happy to help.
Great, thanks, Lance. And your email address is up there on the screen for everybody to see. So once again, thanks for attending. Ka kite anō. Goodbye.
Bye.